Today, Bitcoin stabilizes after yesterday's pullback while Ether's on the rise. And Nelli Zaltsman of Kinexys, JPMorgan's blockchain business unit, joins us from the Wyoming Blockchain Symposium to discuss the bank's deposit token. Welcome to CNBC's Crypto World. I'm Talia Kaplan here in Wyoming for the second full day of the Wyoming Blockchain Symposium. Let's get a quick check on crypto prices before we dive into our coverage here in Jackson Hole. Digital currencies are mixed this morning, coming off yesterday's pullback. By noon Eastern, Bitcoin dipped about 1/3%, but kept its ground above $113,000. Ether rose above $4,200, while XRP was in the red, dipping to $2.90. Okay, let's talk about the latest here on the ground in Jackson Hole. We've already heard from some big names in both monetary and legislative policy, including from Fed Vice Chair of Supervision, Michelle Bowman. In a speech yesterday, Bowman said it was essential for banks and regulators to be open to engaging in new technologies, and that included blockchain technologies like tokenization. She also suggested letting Fed staff hold a small amount of crypto in order to understand how the technology works. And just this morning, Fed Governor Christopher Waller, seen as a contender to be the central bank's next chairman, told event goers in a speech that it was important for the Fed to embrace new technologies to modernize Fed services and foster private sector innovation. Now, I also got the chance to speak with members of the industry on where crypto policy in the U.S. could head next. I moderated a panel this morning here at the Wyoming Blockchain Symposium focused on the U.S. policy landscape. We talked about the Clarity Act market structure bill in great detail. The House passed that bill last month during Crypto Week, and it now heads to the Senate. We kicked off our conversation discussing the Genius Act stablecoin regulation bill, which was signed into law last month. I asked Ripple's Chief Legal Officer Stu Alderodi about that development, which many in the industry called a watershed moment. Did the Genius Act have any role in your decision to create a stablecoin? Obviously, you knew that it was on the horizon, it was on the legislative agenda. Were you optimistic we'll see stablecoin legislation here in the U.S.?
So Ripple is enterprise-facing. Our customers are enterprises, banks, financial institutions. So we follow our customers' needs and what they want. And what we're hearing from customers is they wanted the alternative of stablecoins in terms of payments, even before the legislation took form. We issue our stablecoin from a state-chartered trust out of New York, held to very high standards. Those standards, I think, are the equivalents of what we're seeing in the Genius Act. So I think with or without the Genius Act, we would have leaned into stablecoins. But I think what we've talked about, this administration promised to make the U.S. the crypto capital of the world, and the Genius Act is the first major step.
Now, crypto regulation isn't the only topic of discussion here at the Wyoming Blockchain Symposium. TradFi is also here in force, discussing ways to connect established financial institutions to the world of blockchain. Yesterday, I sat down with Nelli Zaltsman, head of platform settlement solutions for Kinexys. That's JPMorgan's blockchain-based platform focused on developing digital financial solutions. We discussed JPMorgan's deposit token, new partnerships with crypto companies, and what's next for Kinexys. You are the executive director of Kinexys by JPMorgan, which essentially is the financial services firm's blockchain unit focused on things like tokenized assets and digital payments. It was known as Onyx before a rebranding last year. So I'm wondering, for those people who are not exactly familiar with what Kinexys is all about, can you break it down for us? What are some of the goals?
Sure, absolutely. So Kinexys is the umbrella branding for everything blockchain related at JPMorgan. We have three key product stripes, if you will, and we like to say it's payments, information, and assets. I personally focus on the payment side of the house, specifically something we call platform settlement solutions. So how do we work with non-JPMorgan platforms to extend our payment solutions to them? But generally it is to create an intellectual hub within the firm to experiment with this technology, put it into production use, and generally build know-how. And we've been doing this for 10 years. So yeah, and our payments products have been live for 5 years.
And a lot of people might not know that JPMorgan was working on this for the past decade, especially because JPMorgan CEO Jamie Dimon has taken a public stance of being a crypto skeptic. So I'm wondering, what would you say to those people who might think that JPMorgan might not be on the forefront of blockchain technology because of some of the statements that the CEO has made in the past? And yet here we are, there's this whole unit dedicated to blockchain technology at JPMorgan. So what would you say to those people who didn't really know that?
I would say we are an industry leader in this space, and we're probably the most sophisticated bank in terms of blockchain technology right now. I know I'm a little biased, but I actually do think it's true. I understand why you'd ask the question, but I do think Jamie's always been clear that he really does see the value in the technology itself.
That's
and he's just generally a big believer in moving the firm forward from a technology standpoint. And so we've really been very fortunate to get to advance in this space for the last decade, become really specialists in the technology, build internal know-how, be a part of the industry, and just be in this exciting environment right now.
And I want to focus on some of the things that you are in fact doing at Kinexys. But first, obviously, crypto policy, big topic here at this conference, and we saw a lot of regulatory developments for crypto here in the US recently. Just last month, the House passed 3 crypto-specific bills. One of those, the Genius Act stablecoin bill, was passed into law last month. So we'll talk more about regulation in just a bit, but the month before all of this transpired, JPMorgan announced that it was launching a deposit token called JPMD, and it's designed to serve as a digital representation of commercial bank money. So why a deposit token? What are some of the benefits of a deposit token over a stablecoin?
Sure. So to answer that question, I first have to explain the evolution a little bit
Absolutely.
of our product. Our core product that we launched 5 years ago is something we call a blockchain deposit account. So it's still very much within the firm, it's an account structure, but it benefits from the 24/7 rails of blockchain. It also benefits from programmability, so it's much more automated. And historically, we've gotten very good at using this technology for things like treasury settlement or moving around liquidity from like Singapore to New York, for example, in 2 minutes. It's great. Treasurers love it. But what we're really excited about, and what has always been the vision, is to take this ability to be fully integrated with, your bank account structure at JPMorgan, but also to be able to extend it out into digital markets as they mature and appeal to our customers. Also important to clarify, our customer base for this product is institutional and corporate, so we are not yet looking at the retail space for this product, so it's an important distinction, I think, to make.
Absolutely,
because when you're thinking about institutions moving money, one of the things they care about the most is not fragmenting their liquidity or money into different kinds of accounts or assets. They really want to be able to move it just in time and kind of stay within a managed structure. And so when we think about our institutions playing in this space at scale, getting to larger transaction sizes, we want them to feel comfortable that, hey, I have my normal accounts with JPMorgan, I have my blockchain deposit account, which is like this great tool I can use to move things around 24/7. And then when I need to move that money out into public chain for some reason, I maybe want to do some DVP, I want to participate in some tools around liquidity structures, I can also do that as an extension of my relationship with JPMorgan.
And why did JPMorgan decide to first launch a deposit token and not a stablecoin?
So we've been at this a while, and we've looked at it for quite some time, and like I said, we want to do the thing that will most appeal to our institutional and corporate customers. And again, we think scaling and staying within the deposit structure just makes the most sense from an institutional perspective. When we think about where the stablecoin market may grow, we generally think about it more in terms of the retail market because of its inherent structure. We think there will be maybe some limitations on how big we would want to make it as a financial ecosystem, just because you have to pull in a lot of assets, really. When you think about it, you're pulling in high quality liquid assets, treasuries, there's only so much the market can absorb, and maybe that makes sense for some retail use cases, but when we think about the big, high ticket markets transactions, we do think there's value in staying within that deposit structure.
So is there a potential for JPMorgan to move into stablecoins as well? I'm asking because last month during an earnings call, JPMorgan CEO Jamie Dimon said that he doesn't necessarily get the appeal of stablecoins, but he can't afford to stay on the sidelines. Citigroup and Bank of America also expressed interest in getting into the stablecoin space, and we're seeing a lot of interest after the Genius Act became law, the stablecoin regulation bill. So now there's a federal framework for stablecoins, and we're just getting all this interest in the space now. So I'm wondering if we could potentially see a stablecoin backed by the US dollar issued by JPMorgan, for example.
I think that's a fair question. I will definitely defer to Jamie's remarks first and foremost. I will say if we did decide to go into the space, it wouldn't be because we were just like jumping into a fad. I think one of the benefits of us being in this space is we've had the opportunity to be very thoughtful over 10 years about what we pursue, and we're very much driven by making sure if we're applying technology to something, it makes sense for our clients.
So you mentioned that the deposit token JPMD is only available to institutional clients right now. Are you seeing demand for this JPMD token? And just generally speaking, have you been seeing a rise in institutional adoption of digital assets, especially recently under a more crypto-friendly administration?
Yes, I mean, the short answer is definitely. I think if the answer were no, we wouldn't all be here today, to be honest. So
that's an astute point.
Yes. I'm excited about what's happening in the industry right now. I feel like, you know, institutions are getting more interested because they feel that as they see regulatory clarity kind of down the pipe, this is the right time for them to get in and seriously think about, is this an investment strategy for me? How do I do this? If I wanted to buy RWAs, what am I going to use? Am I going to buy a bunch of USDC? Am I going to stay within my account structure? And we just want to make it easy and convenient for our clients to play in the space without having to do too much gymnastics, I think, about where they keep their money.
Okay, that's all for Crypto World today. We'll be back again tomorrow with more interviews from the Wyoming Blockchain Symposium, including a conversation with Wyoming Senator Cynthia Lummis. We look forward to seeing you then.